The Wall Street Journal Indicator is an early indicator of trade flows developed by the Wall Street Journal that uses data from customs agencies to track the exports of goods between countries. It provides a monthly snapshot of how global trade is performing and how it is affected by various factors. In this section, we will look at how the Wall Street Journal Indicator reflected the impact of the COVID-19 pandemic, the Suez Canal blockage and the US-China trade tensions on global trade in the past year. The COVID-19 pandemic is the worst health crisis in more than a century and has caused unprecedented disruption to the global economy and trade. According to the World Trade Organization, global merchandise trade volume fell by 5.3% in 2020, the largest decline since the global financial crisis of 2009. The pandemic affected trade flows in different ways and at different times, depending on the severity and duration of the outbreak and the containment measures in each country. The Wall Street Journal Indicator shows that China, where the virus originated, experienced a sharp fall in exports in February 2020, but recovered quickly and was back to normal by March. The US and Germany, however, experienced a dip in exports in April 2020, but did not recover as quickly. China's exports actually increased by $40 billion in July 2020 compared to July 2019, while the US's exports were still down by $20 billion. The pandemic also had a differential impact on various products and sectors. Some products, such as face masks, medical equipment and electronics, saw a surge in demand and exports, while others, such as tourism services, automobiles and clothing, suffered a slump. The Wall Street Journal Indicator shows that in May 2020, China exported more face masks than any other product, more than $14 billion worth. By contrast, Germany's exports of cars fell by more than 50% in April 2020 compared to April 2019. Another factor that affected global trade in the past year was the Suez Canal blockage that occurred in March 2021, when a giant container ship ran aground and blocked the vital waterway for 6 days. The Suez Canal is one of the busiest and most important shipping routes in the world, connecting Europe and Asia and carrying about 12% of global trade. The blockage caused massive delays and disruptions to hundreds of ships carrying billions of dollars worth of goods. The Wall Street Journal Indicator shows that global trade flows fell slightly on month in March 2021, by 0.7%, as a result of the blockage. The impact was especially felt by countries that rely heavily on the canal for their trade, such as Egypt, Turkey and India. For example, Egypt's exports dropped by 21% in March 2021 compared to March 2020, while Turkey's exports fell by 12%. However, some countries managed to divert their shipments or use alternative routes to mitigate the effects of the blockage. A third factor that influenced global trade in the past year was the ongoing trade tensions between the US and China, which started in 2018 and escalated into a series of tariffs and counter-tariffs on hundreds of billions of dollars worth of goods. The trade war has hurt both economies and disrupted global supply chains and markets. Although both sides signed a partial trade deal in January 2020, many tariffs remain in place and new issues have emerged, such as technology restrictions and human rights concerns. The Wall Street Journal Indicator shows that the trade war has reduced bilateral trade between the US and China significantly. In May 2019, before most tariffs took effect, China exported $39 billion worth of goods to the US and imported $10 billion worth of goods from the US. In May 2020, after most tariffs were imposed, China exported $21 billion worth of goods to the US and imported $9 billion worth of goods from the US. The trade war has also affected other countries that are part of the US-China supply chains or compete with them in global markets. For example, Vietnam has increased its exports to both countries as a substitute for Chinese products subject to tariffs. In conclusion, we have seen how the Wall Street Journal Indicator reflected the impact of three major factors on global trade in the past year: the COVID-19 pandemic, the Suez Canal blockage and the US-China trade tensions. These factors have caused significant fluctuations and disruptions to trade flows across countries and products. However, They have also revealed some resilience and adaptation in global trade amid unprecedented challenges.